Hello. Have you ever wondered if cloud accounting is beneficial to your business and what the benefits are? Today, we're going to go through some opportunities for cloud accounting for your businesses. We're going to introduce the topics of what is cloud accounting. We're going to introduce some of the major benefits of cloud accounting for your business as architects and architectural firms. And then we're going to go through some of the pitfalls as well. My name is Peter Barry. I'm a partner with Welsh LLP. I'm here with Sean Duffy, who's our senior manager for cloud accounting services at Welsh LLP. And we're going to take you through all this today so you can really evaluate and see whether or not cloud accounting can be beneficial to your business and you as a business owner. So before we dig into things, I'm going to pass it over to Sean to give us an introduction as to what is cloud accounting.
All right, thanks for the introduction, Peter. My name is Sean Duffy. I'm a CPA. I've been working in the finance and accounting industries now for over 10 years. And I've been involved in cloud accounting for just over 6 years now. So I've seen it from its birth into what it's become. I think we can all agree that COVID, amongst other changes that brought to the fore, is the need and the ability for businesses to work online with remote staff. And so it's not the only advantage to working online in terms of cloud accounting. There are other pieces to it. But in essence, the definition of cloud accounting is the ability to use accounting tools and the accounting ecosystem completely online on the internet, and being able to use it in near real time, updated in near real time with different staff members and different management teams.
So Sean, in terms of that, as we move to a more paperless world, cloud accounting really enables accounting records to be uploaded, no need for paper, meaning that these services can be provided and can be done anywhere in the world in real time, correct?
Correct, that's right, yeah. So in my experience, some of the tools that we use, some of them that are more well known are an accounting tool such as QuickBooks Online or Xero, spelled Xero. Those are two most common tools on the market. In cloud accounting, there's also larger tools. Depending on the size of your firm, you may fall into the NetSuites of the world or Sage Intacct. And then there's also Sage Cloud as well. And for what you were mentioning, Peter, on the recording of any kind of source documents like bills, receipts, invoices, if they're received as paper copies, right, by mail, or if you have a receipt where you went out and bought some supplies, we can use a tool called Dext, D-E-X-T, which connects with QuickBooks Online. And when you're out and about, if you went and bought some supplies at a store, for example, you can snap a picture of the receipt, and Dext will categorize up to about 80% of it within Dext. So it'll mark the vendor, the date, the amount, the HST amount. So you get all your HSTs, all your ITCs, we know are pretty important to get correct. And then from there, you can digitize it into QuickBooks Online, match it to the transaction, and shave off quite a bit of time in terms of recording it manually and moving through to the reconciliation process. So this all kind of plays into that, right? And Peter, you'll agree with me, over the past 1.5 years, 2 years, it's been crucial to have your information up to date to take advantage of a lot of the government help that's come out, right, for COVID. It's been crucial for businesses to have their information up to date and available to them in either through mobile or online, near real time. Those that had it, that already had it implemented, were able to pivot extremely quickly through COVID. Those that didn't, the ability to get online is a fairly quick and smooth, easy process. We do it quite a lot in our line of business, and so we were able to catch a lot of our clients up to date pretty quickly. So there's a lot of advantages here that I'm kind of setting the table of different abilities that businesses are able to do if they move their accounting online. Sort of a buffet, if you will, of different needs and wants.
Excellent. So you've mentioned a lot of the tools that are available out there, and there's millions and millions of softwares that can be used through this. But if we're looking at a few, at cloud accounting as a whole, and we're looking at what is the benefit of cloud accounting versus what people used to have, which was desktop accounting, or where, you know, one bookkeeper or what bookkeeping team had it on their own computers, they'd share it as possible. And they would, you know, have to print a lot of things when we were all very paper based. Now that we're moving more cloud, more online services.
Yeah.
Can you describe for business owners maybe some of the main benefits of cloud accounting to them operating their businesses?
Yeah, absolutely. It's a great question. I mentioned a few off the top there. Up-to-date information available at your fingertips. That's a huge benefit. It's everyone's able to. You have your, for example, your bookkeeper entering and recording expenses and revenue as it comes in. You'll have, let's say, your operations manager approving, you know, time entries, projects and such, maybe through a software like Harvest, which is a project management software that we see a lot with professional services firms. And then all the way to payroll, perhaps the bookkeeper or the accountant's taking care of it. We can build better, faster internal controls for getting the approvals for payroll over to management, and everything is connected to the accounting software, and everything gets done in near real time. And so there's the audit and digital, there's the digital audit log, I should say, right? So I can talk about watertight security and in that sense, right? As opposed to paper or Excel files that get pushed around through email, waiting for different approvals. We can automate some of that process. Definitely automate a lot of the admin tasks through some of these apps. So you had mentioned that the accounting ecosystem is quite large, and it's true. For either QuickBooks or Xero, for example, there's up to 2,000 different applications that have direct integration with QuickBooks. Now, whether they're all useful or not is up for debate. But for example, in my line of work, we deal with different businesses, different sectors. Every client's sort of different in how they're integrated to different softwares and apps. So we work with them to figure out what works for them, right?
Okay, so if I summarize, I think you mentioned three major benefits.
Yeah.
So up-to-date information, which is something that wasn't there before. A lot of times, previously in accounting systems, you're waiting for month-end close or quarter-end close before you're looking at up-to-date information. Now we're seeing up-to-date information all at the same time. You mentioned security too, and now we are moving to a more digital world, and security is becoming more of an issue. So security is one of these things that is now up and running. And is it more secure than old accounting software? So no money is being spent or going out without the proper approvals, and everything can be put in place in cloud accounting?
Correct. Yeah, that's a big one. If I can reframe the questions, make the question in two different parts. So watertight security on the, let's say, cybersecurity aspect of things, there's a world of difference. You're hosting online with, for example, QuickBooks or Xero. These are publicly listed companies that spend a large portion of their money in cybersecurity. So it's backed up twice daily. We also, for instance, back it up. We use a backup as a service software application called Rewind. They're based out of Ottawa, and they back up Shopify stores, QuickBooks Online licenses throughout the world. So that's the ability to rewind your data every 10 minutes for up to 10 years. So very secure, a world of difference with, let's say, something that's on a desktop machine, where perhaps the accountant or bookkeeper has a copy, and we need to back up that copy every time someone else wants to work on it and send it their way, right? So there's a lot of cost and time effective sort of conversations we can have around that. Whereas something like QuickBooks Online with its different integrations, the apps that you'd like to use are for the most part backed up by the vendors. So in this case, QuickBooks. And we can also look at backup as a service software as well to ensure there's some redundancy going on there. That's the cybersecurity part of it. The internal control part of it, which is what I think you were getting at, let's say for bill payment, right? So we use a number of different bill payment options out there, whether it's our clients' banks. We can ask for sort of read-only bill payment functionalities with them. We use also third-party apps, a few that I can mention offhand that are Canadian, Pluto, Plooto, based out of Toronto, or Veem, VEM, based out of Ottawa here. These are third-party apps that integrate into QuickBooks Online. What it allows essentially to do is to pay bills that are outstanding, and we can implement different dollar thresholds depending on your policies, your internal policies. So let's say any bills under $1,000, we approve it as a payment. It needs to be approved by the senior manager of the architectural firm. Anything from 1,000 to 5,000 requires 2 signatures. So when I say signatures, I just mean approvals over email. So the app will send out approvals for that payment over email, and the payment is not released until both signatories approve of them. So for those that want tighter internal controls, this is a fairly easy, straightforward setup. And for those requiring any kind of assurance work on audit logs, right, of how payments were released and approved and who approved them, very easy audit trail to export into PDF or Excel, or for you to review online and for your records. And that's on the bill payment side. We can keep going with internal controls on, let's say, the approval, right? If there are some of our clients that need more robust sort of approval structure systems, right? So I'm thinking about procurement on upfront, right? Even before it gets into the accounting software, we're talking about procurement, so POs and that. We have different softwares, different setups that can be built online in the cloud, where we would require different approval processes to take place before that purchase before that purchase is ever filtered through into the accounting system itself.
All right. One of the other benefits in terms of up-to-date information, I think we've talked about before, and you and I, Sean, have talked about a lot, is the benefit of business owners having information that they can then filter through and make decisions on.
Correct. Yeah.
Talk to us a little bit about that, and I know you have a couple demos ready, so maybe we can look
Sure.
at the demos.
Yeah, we'll jump right into that. Depending on where the business is at, right? Smaller maybe solopreneurs or smaller businesses with few employees. I think you can get so far in business, in our opinion and in our experience here. I think you'll agree. A lot of business owners, operators will sort of fly by, they'll look at the net income and their cash available, right? And their balance, their balance and cash available in their bank account. That can only take you so far. After a while, you need to start understanding a little bit how the invoicing process works. How can it work best for you, as well as bills needing to be paid. How do I make payroll every 2 weeks? That sort of thing. It starts getting a little bit more complex. And so we introduced a lot of different tools. Again, it depends on the client. It depends on needs and wants. But I found a few tools that are very handy, very useful. And so the way I always go a little bit with the warning up front, right? Like, make sure your books are good. So in essence, in our business line, we treat every month end like a year end. We want the AR, our accounts receivable and accounts payable for our clients to be spot on, because business decisions sort of start there, right? And so as long as your books are up to date, typically in the past, what a lot of business owners, or small or large, would do is have a copy of the books, right, year to date, or month or year to date, and export some of the numbers into Excel and crunch them, right? So what are my invoice AR days receivable, right? Accounts receivable days receivable. How fast am I collecting money? Same thing for bills, and so forth. So again, it comes to one of the benefits, cost and time effective solution to that is, isn't there an app for that? And the answer is yes, there are multiple apps. So there's reporting apps, there's apps that show good key performance indicators. We use apps that can integrate with some of our benchmarking data sets that we have at the firm. So we're able to come to the industry at large and get pretty precise in terms of showing like really good comparisons in near real time. And then we're also very big on the cash flow apps as well. So cash flow forecasting, analysis, micro forecasting. So an example would be, I want to hire someone new for a new project that I just signed. I want a micro forecast just for that. Like, is it worth it? Are the dollars worth it? What does the revenue compared to expenses look like? What if there's a hiccup? Can I build in contingencies? The cash flow forecasting apps also have a lot of built-in cost drivers, expense drivers. So interest rates of loans, revenue drivers would be different little scenarios, right? What if I lose, my anchor client there? What if I add on 3 smaller clients? All of this typically in the past would take hours and hours and a little bit of expertise to build out in Excel. Would maybe take 2 to 3 stakeholders to kind of bounce ideas off of, right? Before getting to maybe a good number. In our world, if your books are up to date, if your QuickBooks are up to date, or zero, plug in these tools I'm talking about, and I'll give a demo in a second. You should be able to get to a pretty good answer in your real time and how things float if you just, with the click of a button, if you choose different scenarios. So let's jump right into that. So one of the tools that we love to use is called Fathom HQ. So it's a reporting and cash flow tool. It's very easy to use. It's easy to present to other stakeholders, other groups. Over here, I've set up a demo for today. The company is called Vanderlei Industries. And what we have here, I want to show the KPIs. I want to show them as compared to target. So another word for target that we use in industry is budget. So you can set up your budget in the system. And I've also inputted some benchmarking data. So if we go down here, total revenue for Vanderlei Industries, 1.4 million for the month of January against my target or my budget of 1.5. So I'm down 4%. Very easy to calculate. It's right there. And then over here in my benchmark, where am I compared to competitors? Very easy to look at. This is connected to a QuickBooks Online account. So that's what is feeding this data. If I need to make an adjustment, for example, I want to record a sale that may have gotten missed, backdate it, it'll show up in, once you do it in QuickBooks Online, it'll show up in real time here. So that'll change. Gross profit margin, very easy. Sometimes some of that data could take a bit to calculate depending on your proficiency with numbers, especially everything on here. Could take a few hours every month, every week if you want to look at it like that. This is updated in near real time, which is one of the big benefits of cloud accounting. Gross profit margin, very important KPI to look at, keep an eye on. And then again, compared to the industry, looks like we're doing okay. So this is basically a very easy sort of buffet of KPIs to look at. Now, there's a lot on here. If, for example, you're not sure what a gross profit margin is, if you click on it, it'll explain it for you, and it'll show your rolling 12-month average, your change from a year ago. So you have a little bit more information. So again, very easy to look at and very quick. So these are one of the big advantages of cloud accounting.
So Sean, one point of reporting, especially this type of reporting, is to make sure that we can see what things we can do better. And what business owners always want to be seeing, what areas are we strong in, what areas could we be doing better. In this example you're showing right here, your revenue is a little bit below target, but you're pretty close to target, and you're definitely doing better than the benchmark or your comparative industry. One of the things that we see a lot with architect firms is what we refer to as accounts receivable deficiencies. where, your business, you send out a bill for services that you provided, and you just sort of wait for payment. And a lot of times, because of the billing process, you may be waiting 60, in this case, we're looking at a result of 72 days, which before you actually get cash. And so you've done the services months ago, and you're still waiting on receiving the cash for those services.
Yeah.
So how can cloud accounting and these softwares help you in your business to improve these results?
Yeah, that's a great question, and it's definitely frustrating. We've seen it a lot, right, Peter? Over the course of the last few years, I've worked. It's one of the main reasons people come to work with me. Sorry, is to look at their what I call order to cash systems, or how can we speed up the process, especially in professional services. Invoices get sent, get lost, favors are made, not followed up on, promises, that sort of thing. With cloud accounting, one of the key aspects of it, I've said a lot today, is automation. There's an aspect to automation that people can't get away from, right? It's mechanized, it's regimented, it's going to happen. So for something like you've just commented on, for invoices, where I've seen the most success is when we implement an automation reminder. It may sound like a very small step, but there's something about being reminded automatically, where your clients, without hurting the client relationship, of course, your clients can't really get away from it, and they respond very positively to it. And so an example that I like to give is with Xero, the cloud accounting system. There's a very robust set of reminders that we can build out and customize on the invoicing feature side of things. So an example would be, let's say your invoice is due in 30 days. 7 days before the invoice is due, the clients will get a gentle reminder. Hey, it can be a customized message. Hi, Mr. Client. Your invoice is due in 7 days. It's been a pleasure working with you so far. Your deliverables are set. Everything's on its way. Should you need to contact our finance department to set up payment, here's the contact information. And here again is your dedicated secure web link portal for payment. On day 30, hey, it's now time to talk about settling up on the bill. Is there anything we can do to help expedite this? 4 days after, right? Your net 30, 15 days after, however you want. You can set up as many reminders as you want in a friendly, professional manner. There's a bunch of templates you can use as well. So we found that to work the best, and with substantial increase in invoices paid, and huge difference in accounts receivable days.
And the big benefit to that is cash flow, right? And it's one of the big challenges for any small business is cash flow. So any way to make your cash flow better and quicker to receive the cash from your clients is always beneficial.
Correct. Yeah. That's a great question. Yeah. What's the goal of reporting if there's no actual items, right? And so as we go through this is a very basic set of KPIs. We can set up very specific, you can set up very specific KPIs to the industry, right? It's just a matter of going back and coding a formula for it, right? So like revenue per head, or revenue per partner, or revenue per project. We can do any of that. Any of that's possible. And so where I want to bring everyone's attention is, if we scroll along here on the left-hand side, over here is a very easy to look at, what I call like a water flow or cash flow visualization, right? So revenue at the top, and then where are your ins and outs. So everywhere it's a red, it's an out. Again, very useful to look at. Sort of maybe look at where things are going out, right, is the major question that clients want to know about, that a firm owner would want to know about. If we keep scrolling around here, right here, this is one of our favorite features. So again, to your point, Peter, we have all these KPIs, but we don't really know what to do with it. Here is a section of the tool that can actually suggest some actionable items in real time. So let me show you what I mean. If, for example, I want my gross profit margin to go from 44.55% to 49%, the things that I would need to do to get there are suggested right down here. Before I show you what it does, I want to remind everyone that accounting is what's happened in the past, right? It's the recording of past transactions. This is more on looking forward, right? So it's grabbing the information from the month of January, right? But if you're pretty confident that January should reflect, what your month of February 2021 will look like, or March, then it's a pretty good measure. So going back here, if I want to increase my profit margin from 44.55%, which it was in the month of January, to 49%, I can do one of two things. I can increase my price, or I can decrease, right? Starting at zero, I can decrease my variable cost of goods sold. So variable cost of goods sold, generally speaking, would be salaries and anything directly related to a sale, right? So if you bought any items that were for resale, right, for a client. So let's say I don't want to cut salary, I don't want to cut staff. I would need to increase my overall price by 8.72%, to be very precise. Now, what if I only want to bump up my prices across board by 2%? So you can drag it right over here, and we can look at the immediate effect that it's going to do. So you're going to go up to 45, almost 46%. So there's almost a direct correlation right there. Again, if I wanted to increase my profit margin, because that was the target that I want to achieve, or that's what stakeholders or investors that set out for me, I can achieve my goal of 49% by increasing my prices by 8.72%. Now, let's say the board or your stakeholders or investors say, you know what, 49 is not enough for us. We want 60. That's all you need to do. Just click it right over here. Instead of spending hours sort of crunching numbers in Excel, or not being sure where to go, finding the expertise to do this, the apps, Fathom will do it in near real time. So again, this would just be to achieve that goal. You can turn around and tell your investors or stakeholders, well, we need to increase our prices by 38%. That's a little bit rough. What if we increased it by 15% instead? What does that do? That gets us to 52%. Are we happy? Yes or no? So this is what we mean by actionable steps or items, right? And then over here, seeing as I've entered benchmarking info and data, I can see where I sit compared to most, and where I am in terms of percentile. And this is a different way to look at it, rank, right? So what is my rank compared to different metrics? My absolute, so this was the reporting section of the app. My favorite section is forecasting, and that's where a lot of people like to spend their time. That's where we like to spend our time with our clients, showing them in real time what happens with cash in the future, right? So again, accounting is the recording of everything that happened in the past. This is cash flow forecasting. In here, Fathom is really powerful in that if, for example, it has a number of built-in what if or scenarios. So here it's grabbing the data again from January and it's forecasting it out. Each of these cells have some drivers, right? So a 2 or 3% growth, or it's using predictive analytics that's built into the software. What's really fun about the software is it has a lot of easy to use what if scenarios. And so up over here on the little cloud, best case scenario, if all of my invoices are paid based on their payment terms, this is what my profit and loss will look like for the next few months. If, for example, I say I want to collect all of my invoices that are currently outstanding within the next 60 days, you'll see them move around near real time right there. So by the end of March, they're pretty much all collected. What's also pretty good about the system is I can build in different micro forecasts. So if I sign a new contract for 100,000, but I need to hire a junior, is it worthwhile? Can I can I see what will happen on my profit and loss in near real time? You can right there see hire a consultant in this case. This is what those sales would represent. And then this is all of the outgoing other expenses that would impact that hire would impact along the way. So that's already baked into this scenario that I built for today. And of course, there's roadmaps. If you're more of a project management mind, these are very, very useful visualizations of what numbers represent, right? As months progress throughout the year. That's it for the demo. I could go on for hours and hours with it and build out different scenarios, but I hope this was useful. There are many apps like this on the market. This is one of the more useful, robust ones that we use. And
okay, so we've now talked about some of the benefits of cloud accounting, but there are some pitfalls as well that we just want to highlight because cloud accounting isn't foolproof. One of the main ones that we see frequently is business owners that think by having cloud accounting, by subscribing to QuickBooks Online or Xero, some other software service, that they no longer need their bookkeeper. And this is a no-no. This is not beneficial to your business because although the cloud accounting gives you up-to-date information and a lot of things can be automated, you still need the skills available to look at the information and make sure that everything is operating correctly. The main thing we see a lot of is garbage in, garbage out. If the inputs aren't being put in properly, the outputs and therefore all the forecasting and all the analysis are going to be based on incorrect information. So you still need a qualified bookkeeper to look at the information and to be there to identify irregularities so that they can be fixed before you start making business decisions on those irregularities.
That's correct, Peter. A lot of what happens with bookkeeping is a lot of the inputs are inputted as is, right? So unfortunately, a lot of, let's say, payment processors like Stripe or PayPal, all the banks that we use, they're not formatted for direct entry into QuickBooks, right? So you still need to massage that info, match it, record it properly, make sure you're capturing all your ITCs properly, all your bank fees, and then go all the way to reconciliation at month end and ensure that everything ties in nicely to the balance sheet, right? So we talk a lot about the balance sheet as accountants, but it's very important. Your bank, your credit card, your shareholder loans, your due to shareholder accounts. Very important that at least I will preach all day long about getting your books done monthly, it reconciled monthly, at least quarterly. And so there's no amount of automation that will do that. You still need a good qualified accountant or bookkeeper to go through those.
So that's the main pitfall that we see. You can't use cloud accounting to replace your bookkeeper. Another one that we see and another one to identify is that cloud accounting does identify your key pain points. And for reporting, there are a lot of these apps out there for internal controls, etc., but they need to be set up properly. So Sean, you went through the great example of setting up reminders for accounts receivable so that your clients pay you on a regular basis. But it takes some time. It's front end loaded to get all these services set up and all these automations set up so they're operating properly. And not only that, the monitoring to make sure they're still operating properly ongoing.
Correct. Yeah. Too often we see a lot of promise. They're set up, but as your business evolves, so should your accounting system. I call it systems architecture. I love it. I do it all day long. I do it for our clients, but it's an evolving machine, and so it needs a little bit of hand-holding, and especially in something where I spoke earlier about the invoicing reminder. That's a lot of client relationship mixed in as well, right? So we need to be careful. Lots of tact, lots of diplomacy. For the most part, those kinds of invoicing reminders, we'll send out 80% of them 80% of the clients, but there's a 20% where, there's relationships, so there's scenarios where we may not need to do that, where it requires a different kind of approach, a more human approach. I agree with you on that.
And the main thing being that for the reporting and the KPIs, that the key performance indicators that you showed us in your demo, if they're not specific to what you're looking for as a business owner, then you're getting information that may not be useful to you. So making sure that everything gets set up so that you're seeing the most useful information for your business and what's going to be beneficial, so that you can action those items and make your business better based on the output that's coming to you.
Well said. Nothing to add to that.
Sounds good. So those are a couple pitfalls just to be aware of if you are switching to the cloud. Make sure that you avoid those pitfalls to make sure you're dealing with the best information possible. All right, thank you for joining us today on our discussion about cloud accounting. So we have gone through today what is cloud accounting and how it can be beneficial to your business. We talked about 3 main benefits of cloud accounting being up-to-date information, the security surrounding your accounting process. So not only cybersecurity, but also security in terms of internal controls for your business and flow of funds out, and the ability to make better decisions for your business specifically, being able to see real-time data, being able to customize your key performance indicators so you're able to make decisions that help your business and grow your business. We also talked about a couple pitfalls. So the ability that cloud accounting does not replace your bookkeeper. It also needs to be set up and maintained on a regular basis so that the information you're using to feed your decision-making is proper and up to date. That's what we've gone through today. I hope that's been helpful for you.
Thank you very much for your time and for watching and listening. If anyone should have any questions to see about if there would be a good fit for their organization to move on to the cloud, or if you're already on the cloud and you want to make it a little bit better, add some horsepower to your setup, let me know, shoot me some questions, and I'll be happy to answer and set up a call with you.
Thank you, everyone.